Hello traders, Gary Wagner here. It is 10:58 in Honolulu and 4:58 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 8th day of April, 2022, and this is the daily report for gold and silver. Gold pricing is finishing up the week exceedingly strong on concerns of the current level of inflation as well as the crisis in Ukraine. Currently, we have gold futures basis the most active. June contract up $12.60. That's a net gain of 0.65% and is currently fixed at $1,950.40. We are long from 1929, and on today's show we will talk about our exit strategy as well as where we plan on raising our stops to next week. Our silver traders are also long the most active contract of silver futures, which are up 0.69% today. That's a 17-cent gain, with the futures contract currently fixed at $24.90. Lastly, we're along GLD, the Gold Trust. That closed today at $181.46 per share. That's a net gain of $1.12 per share, or 0.6%. Traders, this first chart we are looking at is a shorter term chart than we typically start with, which is the daily chart. This is in increments of 240 minutes. We have also drawn in our trend lines indicating a compression triangle by simply fixing this high and this lower high here, and then moving to our lows here and then here. And what we can see from this chart is that we solidly broke above the long-standing channel or resistance line that effectively marked the compression triangle itself. We can see that we had an absolute and defined breakout over the last couple of trading days. As I said, we finished off strong on the week as well as the day, up $12.60 at $1,950.40. Based on our fundamental analysis, which can be read in our opening letter, as well as our technical information, which can be seen on the chart, we are currently looking for this breakout to continue to lead to higher pricing next week. In terms of levels of potential resistance, the first level that we could encounter comes in at $1,967.60. That is based on this top here that occurred recently. Above that is that key psychological level of $2,000 per ounce. And then we are also looking at this top right here that came in earlier during the month, and that's where we're pegging current major resistance for this leg of the rally at $2,1600 per ounce. We will look at these strategically as various targets to exit our current trade. If we continue to see gold prices rise at the beginning of the week and effectively trade just another $15 or so higher, we could find some resistance at this level. If we do, we will have trailed our stop up, but we might look to take profits at that point. However, if we get a major move, as I think is highly likely, based upon the escalation of military action by Russia and the geopolitical uncertainty that currently exists, coupled with the release of Tuesday's CPI report for the month of March, we could clearly see a breakout well above $1,967. If that occurs, our target is going to come in just shy of $2,000 per ounce. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.